USD JPY is at a key level. What happens next? In this video, we're going to take a look at the USD JPY weekly chart and focus on the bigger picture rather than short-term price movements. The goal here is to understand the overall market structure and identify the key levels that could shape the next major move. As you can see on the chart, after a period of consolidation and correction, USD JPY managed to break above a descending trend line that had been acting as resistance. Since then, buyers have gradually regained control, and the pair has been pushing back toward its previous highs. Right now, the market is trading around a very important level near 162. This area has acted as a major resistance zone in the past, and that's why the current price action is so important. In my view, this is one of the most critical areas on the chart because it could determine the direction of a next significant move. If buyers can successfully break above this resistance, and more importantly, hold and close above it on higher time frames, then the bullish trend could continue. In that scenario, the next upside targets could be around 168 and potentially even 176, which are highlighted by the Fibonacci extension levels on the chart. However, it's important not to assume that a breakout is guaranteed. Markets often struggle around major resistance zones, and we could still see consolidation, rejection, or even a deeper pullback before any sustained move higher. That's why confirmation is key. A breakout without follow-through is not enough. We want to see price establish itself above resistance before becoming more confident in the bullish case. Now, I want to emphasize something very important. This analysis is mainly intended to help you understand the technical structure and the big picture of the market. But when it comes to USD JPY, fundamentals are often even more important than technical analysis. Factors such as Federal Reserve policy, Bank of Japan decisions, interest rate expectations, inflation data, CPI releases, employment reports, and especially U.S. non-farm payrolls can have a massive impact on this currency pair. These economic events can completely change market sentiment and invalidate technical setups. So while the chart currently looks constructive and the broader trend remains bullish, traders should pay very close attention to upcoming economic data and central bank developments. Technical analysis can show us important levels and probabilities, but fundamentals are often the driving force behind the larger moves in USD JPY. To sum it up, the overall trend remains bullish. Price is currently testing a major resistance zone around 162, and this is a very sensitive area. A confirmed breakout and sustained move above this level could open the door for further upside toward 168 and potentially 176. But don't ignore the economic calendar, because fundamentals will likely play the biggest role in determining what happens next. Thanks for watching. And if you found this analysis helpful, don't forget to like the video and subscribe for more market updates. See you in the next one.